Okay, everybody, here we go. It's me, Gregory Mannarino, Monday, November 6th, 2023. And do you know what this is? This is, well, the beginning of another lovely week for you and I. It's going to be lovely. You know why? Because we got each other. That's the truth. Before we even move on to what's happening, I want to read something to you. I think you're going to find kind of interesting. If you do subscribe to my free newsletter, this is in your inbox. I'm going to do what I always do. I'm going to cover this, and I'm going to add to it as we go along here. So anyway, what I tried to do with this particular piece here is sum up the current situation, what's happening, and where we are most likely going. I think it's very, very important. So here we go. Title: More central bank currency and debt manipulation and the greatest transfer of wealth in history. That's exactly what we're seeing here, people. So anyway, by me. So last week, lovely of course, the Federal Reserve began a new phase of currency and debt manipulation on an unprecedented scale. And we watched this unfold right before our eyes. Bear with me. As a result, the U.S. stock market had its best week in terms of gains the entire year. Imagine my shock. Imagine your shock. We have discussed here repeatedly over and over and over and over that they're not done. They're not done. They're not done. They're going to create reasons to pull cash into the now. War, expanding war, spending money on this. Because the central bank's goal is what? What is it? To inflate, right? Okay. Keep that in mind real quick. So last week, the Federal Reserve went on a debt-buying spree of monumental proportions, which caused the U.S. 10-year yield to drop. I mean, this is incredible. From over 5% to 4.51%. On top of that, my beautiful friends, the Federal Reserve very effectively weakened the dollar on a relative basis by selling dollars and buying foreign currencies. This is what central banks do to manipulate currencies. Now, you hear a lot of talk about other nations around the world manipulating currencies. The Federal Reserve is the number one manipulator of currency on the planet Earth. So just keep that in mind as we move forward too. Anyway, this mechanism of buying debt and currency manipulation caused the stock market to vault higher. The exact effect that the Federal Reserve was seeking to achieve, quite obviously. Moreover, this mechanism also caused risk in this market to drop substantially. The Mannarino Market Risk Indicator, the MMRI, free to everybody, link in the description of this video, dropped below 300. We still remain below 300, at least at the time I am doing this video blog, 8:04 a.m. Eastern Daylight Time. But we're creeping higher here. So what's going on, just in case you're wondering, is the market is sending a message to the Fed. You know what that message is? Do more. That should worry you. That means you're going to see war expand or some other thing occur that's going to cause cash to make its way into the debt market. The Fed has a multitude of things that it can do to cause cash to move into the perceived safety of debt. The number one thing is some kind of event that would cause a lot of fear, some type of a false flag. You understand? I think you do. Anyway, what the Federal Reserve is likely to achieve, pay attention to this part, by this new phase of currency and debt market manipulation is a stock market which will likely, and this is what they want to do, rally into the end of the year. Why would the Federal Reserve, let's think about this. Why would the Federal Reserve want to spark a stock market rally right here and right now? Okay, we're coming to the close of the year, right? So I'm going to tell you why right here. Corporate management year-end bonuses, which are in the multiple millions of dollars, are based on year-end stock price. Understanding that, people, the Federal Reserve is undoubtedly going to make certain that the CEOs of these corporations, along with the upper management, all walk away with big, fat year-end bonuses. They have to prop up the stock price. This is not a real market, okay? It's a manipulation machine on a scale that is just beyond freaking belief. It's all about pushing wealth up to the 1 and 2 percenters. That's all it is, and sucking it right out of everybody else. All right. What the Federal Reserve will accomplish here, along with other central banks, who will indisputably be buying more debt and continue to manipulate their own currencies, as well as vastly exacerbate the already monumental price action distortions which already exist across the entire spectrum of asset classes, something that we have spoken about, I don't even know how many times over these last few years. The game will remain risk on. What am I saying? Pay attention to this next part. Risk on alludes to the situation where suppressed rates open a doorway, as you all know, where then cash flows into risk assets or the stock market. Risk on, in turn, inflates an even larger stock market bubble. Really? Yes, it does. Okay. Risk on also causes, and here's opportunity for you and I, all right? Risk on also causes the price action of other assets like commodities to remain low, which presents an opportunity to attain these risk-off assets at fire sale prices. I'm talking about more specifically gold and silver. Okay. It appears obvious to me that the manipulation / market rigging by the Federal Reserve along with other central banks will continue until it doesn't. You and I are well aware of that. In the meantime, you and I, look for every opportunity to capitalize on the situation that they are creating. It's a gift. It's a gift to you and I. Now, this is where I go on to say what I am personally doing. Okay, now what I am personally doing, you do what you want. This is what I'm doing. With the stock market, I personally would continue to remain net long and look for opportunities to buy more. I'm going to buy more today. With commodities, more stocks. With commodities, I also will add to my current holdings, more specifically gold and silver, seeking to take advantage of what will likely be even greater price action distortions. We should expect that the current global hyperbubble in debt will grow exponentially larger faster. Are you with me? I think you are. Setting the stage for an eventual and complete wipeout of the world stock markets around the world and the greatest transfer of wealth in history. I'd be willing to bet, sincerely, that you are all with me on this. I want you to have a copy of this. This is in your inbox. If you subscribe to my free newsletter, and I don't share your information, so I promise you. So if you do subscribe, go check your inbox. If not, subscribe right now. A link in the description of this lovely video. Let's talk about a couple of other things here. So we got a warning again from Morgan Stanley on the market. Okay, I understand what these Wall Street banks are talking about. The situation is this: if in fact, and we've seen this, central banks, the Federal Reserve can manage risk, if they can get in here, keeping that doorway open to force cash into the stock market by keeping rates suppressed, the market's going much, much higher. Especially, again, this is the end of the year. The end of the year is so critical to the Wall Street freaks, okay? The upper management, they count on those multi-million-dollar bonuses. And the Fed is going to make sure they get them, in my view. I believe the Fed, look, do you think the Fed works for you and me? Of course not. The Fed works for Wall Street. And Wall Street gets what they want here. Wall Street runs the Fed. It's the major institutions that run the Fed. So you think they're not going to prop this whole thing up so the big fat cats on Wall Street can walk away with bonuses that you won't even believe? Again, so they're going to prop up the market. The only way they can do that is to keep rates suppressed. And that may include, and I believe it will, an expansion of war, propagation of war, more death, more pain, more suffering. You understand? And then, of course, we'll see more of what we witnessed last week. It was unbelievable. Do you know what it would take to push the 10-year yield down from over 5% to 4.5% in a matter of days? How much cash it would take to do that? Who's buying all the debt? I think you know. And with regard to the dollar, do you see what happened to the dollar on a relative strain basis? It got decimated. Again, this is the Fed selling dollars, buying currency, buying foreign currencies. That's what they do. All central banks play the same game. It's a manipulation of the currency, okay? But you're not supposed to know that. No, because the Fed is so nice. They all walk around with halos over their heads. Yeah, imagine that. Anyway, so Morgan Stanley warning on the market. Ignore it. Ignore these warnings from these banks, okay? Because I'm telling you right here and now, because they're not going to tell you where to look. Greg Mannarino will. Make sure you check market risk. Follow the MMRI. If the MMRI stays below 300, this market's probably going higher. Or if they could even stabilize it at 300. Again, it's not so much the number. It's where the market is going and how fast it's getting there with regard to risk. All right. We also found this out. Again, U.S. manufacturers fell in deeper into contraction last week. Okay. Manufacturing here in the United States, it's over. It's dead. So again, this morning they were talking about manufacturing activity here in the United States. Widespread fall in business activity, much wider than anyone expected, except for you and I. Okay, you and I understand where this is going. Now, Saudi Arabia and Russia are now going to be extending their supply cuts with regard to crude oil. Crude oil is higher by 1.5% this morning. Lovely and perfect, as you would expect to see in this kind of an environment. Going back to the market, stock futures are higher this morning. Not much. I mean, we're talking fractional. The U.S. dollar is weaker on a relative strength basis. That's the Fed. The 10-year yield is moving higher. Okay, that's not a good sign for the market. And the MMRI is a shade below 300. The Fed, in my view, is going to do more or look for a false flag event, some other thing to push cash into the debt market. It has to be done, especially, again, considering it's the end of the year. The stock market, they're going to prop it up, and I just told you why. Cryptocurrencies are getting a bit higher this morning. Bitcoin over 35,000. Gold and silver under a little pressure, as I outlined in this piece. You're going to see more of that here. Okay, gives us opportunity to acquire more at fire sale prices, at least in my view. They want to remain risk on. Should be obvious. Everything I just told you is in this. Everything you need to know is in this. All right. Again, I'm not asking for a single dime for this. I want you to have it for free. It's in my newsletter. Anyway, that's where we are, people. Okay, we got this covered, you and me. We know what we're doing. We know why we're doing it. We can't possibly be beaten because we're so far ahead of the curve. That's just my opinion. You're entitled to your own, but I think we got this. I really, really do. We've always had it. They think they're smarter than we are, but I can promise you they're not. We know their playbook backwards, inside out. So if we understand their playbook, we know what they're doing. How can we possibly lose? We can't lose. It's impossible to happen. And we got each other's backs. All right, this guy here loves you a lot from the heart. I mean that. If you got something out of this video, please share it. Get it out there. Comment. Those thumbs up are required, honestly. Those thumbs up let the algorithms pick up the video and it gets shown. So please click that thumbs up. All right, I'll see all of you later, 4:05 p.m. Eastern Daylight Time for my live stream. Have some questions ready for me, and we're gonna of course nail it to the wall as we always do. And I really feel like we're invincible because we got each other, and that's so important. All right, love you a lot. See you later.